Chakri Lokapriya what he's going to do about Bajaj Housing and, of course, the rest of the market as well. Chakri, hi, morning. That's the question on everyone's mind, right? A 90 to 100% premium on Bajaj Housing. If that were to be the case, and if you've got the, luck and you did get the IPO subscription, what do you do then?
Good morning. I think, whether it lists at the current, listing price, which itself is about 2.5 times book, and if it's listed at an 80-90% premium, it's 5 times book. Whereas the rest of all the housing companies are trading at, 1 time book, PNB Housing, LIC Housing, etc. So, and housing as a business, as a commodity business, as in, apart from the rate of the loan and the quality of service, that's the only intangible. So I'd rather buy the other housing companies, PNB Housing, LIC Housing, rather than trying to buy. Of course, if you're lucky enough to have gotten the IPO, then I would be a seller on listing.
Okay, so that's the latest in Bajaj Housing Finance. Yes, valuation is something that you need to watch out for. But Chakri, what are you doing in this kind of market? We're hitting fresh records high. There is still quite a bit of momentum when it comes to mid-cap as well as small-cap space. Where are you putting incremental money to work?
Once the Fed rate cuts happens on September 18th, and 2 days from now, it will be the first cut after 2020, so after 4 years. And this is a clear pivot which sets a cycle for rate cuts, mini rate cuts. RBI will therefore be also forced to follow. And if there's a fuel cut in India, which is likely to happen, petrol price cuts, that will further add to the profitability of companies. So it's now time to look back at some of those infra names like, Patel Engineering or some of the consumer companies, because that will add momentum. Consumer durable companies like Voltas, Titan, these kind of companies to buy into.
Voltas, Titan, as well as Patel Engineering. These are some of the recommendations that's coming in from Chakri. But before I let you go, Shivangi.
Sudeep Shah then. Sudeep, hi, morning. Good to have you on the show. Banks finally making a comeback, or actually financials, the larger cluster. I just wanted to understand what levels are you monitoring now in the Nifty Bank and what's the trade you would recommend?
Yeah, very good morning to all of you. See, what's happening with the Nifty Bank is, if we see the Bank Nifty carefully, it started its journey right from the mid of August, where sub 50,000 levels, it took support at the 100-day moving average and started to move towards the 51, 500, 700. And thereafter, we saw that sharp cut on the last Friday, the Friday before the last week. So then what has happened is that accumulation from the lower levels, we've seen huge volumes happening in a lot of banks, which is above their previous, say, the volume buildup that was happening in the previous sessions prior to that. So now the index is closed at a highest level post 24th July. So what we feel is, from the current levels, Bank Nifty is now headed towards 52,800, 53,000 in the next 4 to 5 trading sessions. And on the downside, any dip towards 51,600, 51,700 should be used to go long in Bank Nifty. Keep a stop of 51,400. We feel that the levels of 52,800, 53,100 zone could be a possibility in the next 4 to 6 trading sessions. And within the banking pack also, what could lead is ICICI Bank and HDFC Bank from here on. So both these biggies would be supporting the Bank Nifty and take on most of the hard work to take Bank Nifty post 53,000.
Consumption space which looks good to you, which you would say, oh my God, I did not notice it, but suddenly it has become big. I mean, I never thought that KDDL, a watch company, would become so big.
Yeah, you're absolutely right, Nikunj. The luxury end of has been phenomenally strong. If it the waiting period to buy a Rolex watch, is upwards of a year, depending on the model, and that's showing up in these stock prices, and that shows no sign of abatement. Now, I clearly missed the segment in buying Atheos and other companies, but valuations, I'm not sure. I don't follow this company, but luxury as a segment, so which means Titan. You can go to, because it's still mass affordable investment, luxury, all things rolled into one. Kalyan Jewelers. These companies are still luxury and they still are consumer durable, so I would buy into them.
That's the word coming in as far as some of this consumption basket is concerned, especially the premium and the luxury consumption. In fact,
I want to revisit HDFC Bank, because for Bank Nifty to go higher, HDFC Bank has to chip in. Unfortunately, HDFC Bank is still in this hibernation. It went for a break and it has not come back only.
They couldn't see, if you see the charts of HDFC Bank on the weekly time scale, now the stock has given a highest close, I guess, post 19th July. So I feel steadily there is some base building happening here. And we've seen that this typically this zone of 1670, 1675 has acted as a resistance. But given the way Bank Nifty has closed above 51,600, 51,700, which it was not able to do so in the last 6 to 8 weeks. So that is now giving me confidence that slowly, one by one, each and every bank will now start performing. We have even seen Axis Bank performing. We have seen ICICI Bank showing relative strength in the last so many weeks. So I feel it's going to be a cumulative effort this week if we speak about HDFC Bank and ICICI Bank. And that's going to propel Bank Nifty IRN, specifically coming to levels from an extreme short-term perspective. I feel 1635, 1630 zone will now act as a strong support in HDFC Bank. And we could see levels of 1710, 1725 in the forthcoming few sessions.
You making of the health of the FMCG sector? Rural seems to be making a comeback. The big question is it going to be sustainable and meaningful?
Yes, I think the recovery is fairly an expected one. Good monsoons, revival, but will that push up the volumes above expectations? I don't think so. Whereas on the other hand, consumption like buying into consumer durables, whether it is buying a two-wheeler or buying a jewelry at a Titan or a Kalyan Jewelers, I think those trends will accelerate going into the festive season. And also interest rates cuts happening will benefit the auto sector. So two-wheeler sales will benefit. What do you call that? Jewelry will also benefit. Some amount of luxury travel, mid-luxury travel, like Lemon Tree hotels, Indian hotels, all that will benefit. I think that's the way we're approaching rather than pure FMCG as a sector.
Being very selective there. But Chakri, what about financials? Because at least on the technical basis, our chartists were telling us that it's poised for a breakout. But if you had to make your top picks within the sector, what would you look at?
Like we were just discussing, HDFC Bank is clearly stuck until they sell some amount of their loan portfolio to bring back a balance between their loan book and deposit book. That imbalance will be the catalyst to re-rate the stock, but we'll wait and watch. Until then, we will buy an SBI, which makes 1 in 3 loans in this country. And with the US Fed rate cut, we think it's a catalyst for PSU banks. They're still very strong. They've corrected. So SBI, Canara Bank, Union Bank will buy.
Chakri, good to have you on the show. We'll let you go on that note. Let's get in some mid-cap trading ideas as well before we, of course, take it across to Nick Kunj for that chat with Sanjeev Mehta, former chair at Unilever. But Sudeep, what mid-caps are looking interesting to trade today?
See, I have 2 stocks here. One is a mid cap, one is a large cap. So I feel 2 stocks which could do well. The first one of them is ABFRL, Aditya Birla Fashion and Retail Limited. Now, what this stock has done is, like, if you see right through the month of March till July, the stock has had a one-side rally from 220 to 340. Thereafter, the stock slid into a period of consolidation. That period of consolidation was with decent volumes, and once again we are seeing a breakout of that consolidation. The stock in the last 5 sessions has shown a series of higher top, higher bottoms. So I feel from the current levels, ABFRL, which is also strong on all the time frames, daily, weekly and monthly. So I feel this stock could be bought with a 320 rupees stop loss on the downside and 345 as a target on the upside. The second stock that I like is from the cement space. Now, we've seen the Grasim perform well in the previous 6 to 8 months. The prior trend has been very strong. In the month of July, we saw some profit booking from higher levels. But once again, the stock has come back sustained above its 20-day moving average, as well as all the other major moving averages. It's quite strong on the daily, weekly, and monthly time frame. So I feel from the current levels, the stock is poised for a decent breakout on the upside. And we could see levels of 2900, 2950 on this name. And this could be bought with a stop loss of 2730 on the downside.
Right, Sudeep, we'll leave it at that. Naresh, what about your mid-cap strategies?
If you like this video, then like, share and subscribe to ET Now.